Hello to everyone. Thank you for being here. Hello, Amanda. It's good to present with you as always. I'm excited to get into this. Appreciate everybody sitting with us for an hour. It's an important topic. Right sizing. What what do we mean by it, and what are we going to jump into today? Well, let me ask you a question. Why did you start your firm? Go back to that time when you made that decision. I imagine it was some combination of a desire to help clients, uh, to make money, to have that entrepreneurial journey, get paid what you're worth, probably have some flexibility. You might be chuckling when I say that. Oftentimes, when we start firms, uh, things get off track along the way, right? And right sizing is a project and a series of projects and a mindset to return you to why you did this in the first place and to get you there. I hope you find great value in our session. Our goal is to come from a place of caring and from a lot of experience, a lot of trial and error, and to give you tactics that you can take today to have a firm that works for you, that supports your life, that accomplishes those things that you set out to accomplish. I'm excited to dig in. Amanda and I have been in your shoes, whether it's we've both owned businesses, and in our current roles, we advise hundreds of firm owners, tax and accounting firm owners through our company Padgett to accomplish those same goals. So a lot of content that comes from that. I'll give a brief intro on me. As it relates to this, I started a company, a staffing firm that serves the CPA profession in 2011. After really many tough years in that business, I took our business through, I didn't know it at the time, but it was a right sizing program of sorts. And once we got it on track, we scaled it to a seven-figure revenue in about 3 years. And it got to the point where I was actually able to hand off the business and get out of the business and keep it as an investment so that I could join my current employer, Padgett. So I've been around the accounting profession for about 15 years and serve as CEO of Padgett, more on Padgett later. I want to welcome my partner at Padgett and good friend, Amanda. Hello to you, and tell us about yourself.
Hey, Jeff. It's good to be here with you. So I am Amanda Aguillard. I am the Chief Operating Officer at Padgett, but prior to joining Padgett, I own my own practice. I actually still have it under our franchise umbrella. And I'm able to do that because similarly to you, I took some time to build a system where I could hand it off to someone else. So I've removed myself from the day-to-day of that. But my history is I'm a CPA. I am an accountant through and through. Back to when I was 16, I decided I was going to be a CPA, and I started my career with Deloitte in the tax department. Then I was the corporate controller of a company here in New Orleans for about 5 years, and then I had two babies in 16 months, and so stopped working for a little while. Took a career break, and decided I was going to go back to work when they were about 7 and 8. They are now 20 and 21. But I ended up with an accounting practice with employees. I was just starting out, hoping to do some contract work, and sort of accidentally created an accounting firm. And that was back in 2012, 2013, the dark ages of cloud in the accounting industry. So I spent some time figuring out what that meant. And really enjoyed it. And so turned that into a second company teaching accountants and bookkeepers how to use technology and cloud-based software. And then in 2021 was able to join Padgett and be able to bring that experience of figuring out wiring, which we'll talk about today, for accounting firms into Padgett and being able to help about 160 firms that look a lot like mine. So I am thrilled to be here with you today. So let's get started on talking about right sizing.
Yeah, Amanda, you and I have logged a lot of hours discussing this topic for firms and for each other. Padgett, our employer, is the sponsor of our session today. While it's the sponsor, we're here to give tactics that we've learned from working with, like Amanda said, over 160 small local firm owners throughout the United States, another 80 or so in Canada. So yeah, we're going to mention Padgett a lot. That's because our stories come from our experience there. But as the sponsor, I just want to give you a brief intro to the company. Padgett is a 60-year-old franchise accounting and tax and payroll business. Like I said, we have a footprint in North America, the US, and Canada. We exist to help create immense value for accounting firm owners so they can focus on running great businesses and provide exceptional service to their clients. We have a program, we'll mention more later, where owners of firms can affiliate with us to realize all the massive benefits of being a part of a decades old system that has been building accounting companies for nearly 6 decades. You can affiliate with us while remaining very independent. We'd love to talk to you about it, even if this is not interest to you, but just the topic of right sizing is interest. And we'll show you how we can connect later. So let's set the stage. Trying to connect where you are at. I saw one of our attendees is holding a firm retreat coming up and thinking about this topic right now. Right sizing your firm is something to consider if this sounds like you. If you get through a busy season and you say to yourself, there's got to be a better way to do this stuff, and I can't go through it again. If you've had that thought, this is an important topic to talk about. Maybe you're working more than ever and feel like you're not taking enough home for it to be worth it to you anymore. Maybe you're overwhelmed by your staff and the issues inside of staff. You feel like they're not productive, they're not engaged, and you're always holding this team together by a string. You may have a high volume of low revenue, low profit work that is overwhelming you and your staff. You are not alone. This is a natural phase of developing a business. It's very common in the accounting profession, but there are answers, and we want to give you tactics so that you can see a clear path to change. Amanda, as they're answering the polling question, walk us through what we're going to cover today, please.
Yeah, so as you mentioned, this session is meant to be a bit of a wake-up call. So do you want to do the next year the same as you've done the last year? And if not, we're going to go through how to evaluate what is really going on in your practice, what is the problem, where to start. Spoiler alert, it's probably pricing.
Yep.
And what resources you need to get there. So let's go through what is right sizing. So at Padgett, we call right sizing, we call this whole process right sizing. And for us, this is refining the system that is your firm so that you can grow. And I know not every practice wants to get huge. Not every firm owner wants to own a multi-million-dollar practice. But by and large, most folks want a more efficient, more streamlined, more profitable practice. And so that can't happen until the wiring is set. So at Padgett, we say right sizing is doing the right work for the right clients at the right price with the right staff. So let's talk about each of those sections in pieces. Work. So choosing the products that you deliver. We are in a product delivery business. We offer a thing for a price. So what is the thing that you are going to sell? That should be something that you are capable of doing, hopefully enjoy doing, can make money doing. So staying focused on what your core services need to be, and that might be 2 things, it could be 6 things, but not getting distracted by what's going on in the industry and folks telling you you need to do this, whatever offering, focusing on what it is that you know you're good at and can produce for your clients. That's choosing the right work. Choosing the right clients to provide those services to. So not taking every client that walks in the door. If you are an owner who has started a practice from scratch, you had to do that in the beginning. I had to do it starting my practice. I had to take every client that came in because I needed just dollars, but that's not how we need to be running our practice at this point in the journey. We need to be choosy about who we serve. Price, getting market value or above. So not billing based on time, but based on what is the market value for the things that you're providing. And then staffing, putting the right people in the right seats. Jeff, you have tons of experience in this, but a lot of firm owners know that they need to hire and not sure where to hire. So making sure we have the right people doing the right jobs. So as we work through the session, we're going to talk about the 4 phases to right sizing. We're going to reflect. So we're going to take a hard look at what we've done in the last year or two and be honest with ourselves about how that felt. we're going to talk about repricing. So how do we get to market value or above for the work we're doing? We're going to rework our processes. So how do we fix the bottlenecks in the system, whether that's us or bad technology or process, and then addressing how we get to those by using technology and staff. So before we get started, I want to make sure everybody's in the right headspace to be open to this. Hopefully you have come off of the busy season and have taken some time to refresh, take a break from work. So make sure you're objectively ready to look at your practice, but don't wait too long. This is not an August exercise. This is a May or June exercise. Listen to what we're telling you, take it in, and then let's get to work. Let's get to work and actually implement some changes.
I think it starts with your role. And at the center of every business is its principal, is its owner. And Amanda, you said the word bottleneck. How many times have we heard an accounting firm owner say, you know what, Amanda, I'm the bottleneck? We can relate. When I was in years 0 through 6 of building my firm, it was a pretty low time. There was a lot of overwhelm. We were getting fired by clients frequently. There were tasks slipping through the cracks. At my lowest point at this, though, I hired a coach. And you know this story, but I needed a partner who could help me through this issue. And it worked. And there was a really happy ending, although I wasn't very happy at this point in the business. My coach's name was Paul. And Paul helped me see that if you own a business, and this is cliche, but you wear multiple hats. And we've all heard this, right? But what in the world does that mean? You've heard the cliche that you got to work on the business. We went deeper than that and realized there were multiple roles that I needed to play. There were projects and time and focus in different roles that I needed to play. I was just the doer. And being the chief doer officer was causing me to create every bottleneck inside my business. And so the business was struggling because the other roles weren't getting attention. All right. Every owner of a business, and certainly accounting firms, I encourage you to think this way. Like, you play the role called CEO. Now, the CEO doesn't deliver the work. The CEO builds the systems and hires the people that gets the work done and fixes broken stuff so that it works the next time. My coach, Paul, forced me to spend the first hour of every day as the CEO of my company and stop being a doer. You're the entrepreneur. What is an entrepreneur? Well, that the project work of the entrepreneur ensures that the business is serving you, the owner, that the thing you got into this from the beginning, the way you wanted to feel being an owner, what you wanted to accomplish, the entrepreneur comes in and says, we got to make sure that's happening. You play the role of an investor. You started this entity that has great equity and it's building, and you own that equity or part of it. And you've got to ensure that you're maximizing that equity for this event that happens at the end of this called an exit. And you're a doer. And I think we're all good at that. And don't have to explain what that means, but you're getting stuff done. And taking care of the client work, and you're taking out the trash, and you're doing everything in between. But once I understood these roles, I started spending really intentional time solving system problems inside the business, focusing on developing people. Paul called it the golden hour. I was spending every day kind of in these roles before I went into doer mode. And that helped me go from death spiral to scaling up and reaching $1 million mark in our revenue in about 3 years. And Amanda, this is a lot of theory, but I think it's critical to start with mindset and to see that you've got to play your roles. But I want to go tactical now and start talking about things that we can do. And I know that starts with the work we're doing and the pricing we're doing. So I'm going to hand it back over to you.
Thanks. So rightsizing really begins with getting real about how it went last season, if you're a tax professional. And so I want to throw this example up there and see if this strikes a chord with anyone. So let's take the example of a $1,000 business tax return. So $1,000 sounds like a decent fee for a return in most cases. But let's take a realistic look at what happened for this tax return. This is an example that I heard from actually one of our franchisees yesterday. So the client comes in with their accounting file from they're doing their own books. They're bringing in the accountant's file and tells you that everything is reconciled. And what they mean by everything is reconciled is that they have assigned every bank line to a category. It's been coded, but when you get into it and you open it up, you see all these errors. So this is, you're sitting in February or March and you've got tons of undeposited funds, ask my accountant balances, you have clearing accounts that are going, they're huge, balance sheet accounts going the wrong way. Nobody's looked at loan balances. So, I know this has happened to people out there. I know this has happened. So the client thinks it's ready. It is in fact not ready. So you end up doing a year's worth of accounting work to get the tax return done. And then in the meanwhile, you realize payroll's a mess. So you've got either owner draws that should be wages or vice versa. You fix retirement contributions, reissue W-2s. I know that somebody out there is feeling this. So in reality, you're spending 70% of your time on this client doing non-tax prep work. So when you break it out, if you look at the top line, you take that $1,000 fee, 30% of it was really a tax return. So you've done a $300 tax return. Congratulations. You did 12 months of accounting for about $500, and you did payroll cleanup for $200. On the surface, you're like, it's a $1,000 fee, but the reality is it's a lot more work than that. So if we really assigned dollar amounts to the services we were providing, here's what it would be. So that tax return, even just using like Intuit's published pricing for business tax returns, that's about an $1,800 tax return. Then we've got 12 months of accounting, minimum $300 a month. That's $3,600 of accounting work. And then payroll, again, a minimum of probably $200 a month to run payroll correctly is about $2,400. So when we add up all those services, this $1,000 tax return is really should be a $7,800 a year client. So this is your call to action. With a fresh memory, go in and look at some of your business tax returns and estimate how much work was done in that compressed season, February, March, April, that should have probably been done in the other months of the year, and equate a dollar amount to it. You're not just, the dollars are one thing, you were leaving money on the table, but you are also straining the limits of your time, your energy during busy season. And so when you consciously protect that time and that energy, you can be a better advisor. So the truth is, your clients want to build a relationship of trust and open communication with you. They value you as an advisor, and they're willing to pay for it. So we are, as accountants, I say we, because I certainly wasn't good at this when I had my practice. We are not good at communicating that we can offer these services. So I've had clients in the past who have come to me and said, I just hired a business coach to show me how to do these things. Well, I could have been a business coach to them. I could certainly deliver those things. But I wasn't good at proactively communicating to them that I could offer those services. And even when we do offer the services, a lot of times, again, we give them away without establishing a value exchange. I'm giving you this, but I expect some dollars for it. So the reality is that when we are frantically working in our practices and just keeping things moving, we aren't creating space to have these deeper advisory kinds of conversations. We're compressed in the season, or we're worn out after tax season. And a lot of times these proactive conversations need to happen on the client's timeline, not ours. So if your client wants your advice in January or February because they are looking to sell their business, or they have an opportunity to maybe purchase a building, that can't wait until we have recovered from tax season in May. We have to be able to do that when it's appropriate for the client. So we've got to build in the space to have proactive advice. And if you're struggling with this, and a lot of folks are, at least get a quarterly conversation on the table with your tax clients. Try to turn those conversations into something that's more advisory. It does not have to be formal, but just having touch points with your clients every quarter, it just makes your whole business have more value and keeps that client sticky to you. So we would love to help you turn those conversations into recurring revenue, but the first thing you have to do is build space for it. So let's start with an easy reflection. So at Padgett, we often have firms that come to us and say, I've got to, things are going great, but I've got to make a little bit of a change. First thing we ask them is download a list of your clients, give us a client census, and let's go through each of these clients and figure out how we move forward. So that's something that needs to be done now. We don't want to decide which clients we want in November or January. We want to do that now. So I think about Marie Kondo, if you remember this, organizer, probably almost 10 years ago now, who was a little bit, out there, but her thing was you have to declutter your life. And if something doesn't spark joy, it doesn't belong in your life. That's how I feel about clients. So go through your client list, and if they don't spark joy, let's move on from our relationship with them. So the easy ones are the A pluses. Who are your A plus clients? Those are the clients that give you what they're supposed to give you when they're supposed to give it to you. They're pleasant. They are, polite to your staff. Generally, we're charging them a market fee or above, and there are no complaints about it. Those are A plus clients. We are keeping those for sure. Then jump down to the Fs. Fs are pretty easy too, right? They show up on the 10th and expect their return by the 15th. They give you incomplete information, and when you call them or reach out to get better information, they are unresponsive. Those get fired. And above all, if they're rude to your staff, we protect staff at all costs. So the middles are the Bs through the Ds. Figure out where they land on that space, and if you can retrain them, can you get them to an A plus? If not, let's go and let's make space for the clients that we really want. So once you have a client list tidied up, what do your A's look like? What are the commonalities with your A's? Is it industry? Is it software use? Is it a stage of business? Are they startups, pre-revenue, exiting? And can we get more clients that look like that? So we can focus on clients we want, go get those, not be distracted. So got to make sure that you are staying strong on leads that come in as well. Don't fold. Be comfortable saying no to bad leads. Is your lead, an A, or is it a D with a smile? We're only taking the A's. So getting this piece, this is the right client piece of rightsizing. This is an easy first step to evaluate how it went. Okay, but then the real crux of rightsizing is pricing. I mean, this is where we start. When things feel unsustainable in your firm, when it feels like a dumpster fire, when you're on a hamster wheel, all these metaphors, right, of like just somewhat chaos, the first thing we do is pricing. Pricing is going to give you the capacity to fix the other problems. If you recognize yourself in anything on this slide, you might have a pricing problem. So when you set pricing at the right level, one of two things is going to happen. And we've seen this over dozens of firms in Padgett. You will either have more dollars to serve the same amount of client work, which means you can hire, you can buy technology, you can buy capacity, or you will have the same dollars for less but better client work. What doesn't happen, we have evidence on this. What does not happen is that you have fewer dollars. You either have the same or more dollars when you increase your prices. We've done this, like I said, dozens of times across the company. We've systematically repriced, and we've never seen top line revenue drop. So pricing allows us to be selective about the clients we take, allows us to be efficient and optimize processes with our choice of technology. We've got the money for it, which means it opens up capacity. And what you do with that capacity is up to you. You might work less and spend more time with your family. I'm sure there are folks who are listening today who would love to have that, whose partners are probably telling them that that's important and they need to. Or maybe this capacity allows you to grow new clients, get new clients. I know, and we've heard from a lot of firms who say, I couldn't take any new clients this year because we were at capacity. Well, what if you had room to take those? So the good news is that it does not take much of an uptick to make a huge difference. So it doesn't take much of a price increase to make a huge difference to your bottom line. So if you think about your current clients, every dollar of services that you have in your current client base might yield you, call it 35% to the bottom line, right? Like a client comes in of their engagement, probably 35% of it's profit. But when you increase the price on a current client, every dollar you increase their fee is 100% going to your bottom line because you're doing the same thing, right? You're doing the same work. So let me say that again. You increase, every dollar increase of a price increase is going 100% to your bottom line. So it's exponentially more powerful to get your fees on your current clients right than it is to go find a new client. So let's talk a little bit about the mechanics around getting that right. So pricing, number one, it has to be objective. You have to take emotion out of pricing. We've heard all of the objections to raising prices. Clients can't afford it. They need me. Their business will go under without me. They have been with me since I opened the doors, and so I owe them this. Those are all emotional objections. And that isn't to say that there aren't exceptions that we make, you know, the little old grandma, but those exceptions have to be deliberate and limited. It cannot be exception. That can't be your pricing strategy. You know, of martyrdom is not a pricing strategy. You have to objectively go set your prices and use that price to build the business you want. I mean, you alluded to this before in the opening. If there are lots of job openings in accounting, if you wanted a job, you go get one, but you wanted to be an entrepreneur. You wanted to build something with enterprise value. So how do we do that with pricing? We're going to set objective pricing using these buckets. So complexity, how complex is the work? And this is not really about hours so much, because with technology, volume doesn't really matter as much to hours. It doesn't really equate to hours, but how much work is there? So this is just the breadth of the work. That's the complexity. We want to look at that objectively and price objectively. Risk, what is our exposure? Is it going to take extra effort to detail review client data because it's highly regulated, or are there additional compliance requirements? That costs your clients more. And then value, this is probably the most important. What is the impact of what you do on the client? So we say at Padgett, you need to get paid for what you know, not what you do. What would be the employee equivalent of what you bring to the table? I've got, you know, I'm almost 50 now, as are you. I've got nearly 30 years of experience in accounting. I am coming to the table with 30 years of experience in accounting. I need to get paid for that. That is the value of what I bring, not the 15 minutes of, you know, doing a tax return, although a tax return never really takes 15 minutes. What am I bringing to the table? So a tax return for a $100,000 company is not the same value as a tax return for a $10 million company. So those are objective sort of pricing buckets. So how do you know when you've got it right? You're going to look at the margins. If you are taking home 35% of your revenue in owner comp, you've probably got it close to right. And you might think to yourself, I don't need to take that much, you know, but this again is a disservice to your staff, to your clients, to your family, to the going concern of your enterprise. Don't come to it from a place of charity, because it's not just you. It is your family. It is your business. It is a legacy you leave. So having good benchmarks can be helpful, and at Padgett we do that for our firms, but you can go find benchmarks on pricing anywhere. So look at those objective prices, and how can you lay that on top of your current clients and set the bar for clients that are going to continue to come. So here's just a quote from one of our firm clients out of Utah. When you get pricing right and you have space to do better work, you are going to have happier clients. So this is a quote from our owner in Utah, talking about the value of proactive meetings and advice. And because this owner prices well, and we went through this with her a couple of years ago, she has the capacity and the energy and the time to reach out and engage her clients proactively. She's not waiting for her clients to come to her and say, what is this, you know, thing I heard about in the news? She's reaching out to her clients proactively and saying, here's how I can help you. Let me make your business life better. And repricing can be scary. So repricing your current clients there's a lot of fear around that. We've seen over and over again, price increases don't scare clients off. These are some results from our tax season survey we just ran with our own practices for this year, 2025. And you can see what the numbers look like. So we know that if you do pricing well, you're going to increase your revenue and free up time. But we hear, I'm afraid clients are going to leave. They just don't. They just don't leave. So at the top, these are the price increases that we saw across our network for 2025. Almost 90% of our firms increased their fees by 5% or more. We consistently give them the tools to do this with confidence, and they do it, and they have taken the leap, and they're living better practices because of it. And we're seeing this, hit every year. Our fees are being increased by at least 5% across the board for the most part. But the biggest reason most firms don't do this is because they're afraid they're going to lose their clients. Again, the second pie chart, almost 90% of clients accepted these fee increases across the board. Only a small amount opted to go out. And in general, the ones that leave are usually not great clients. Those are the ones who turn in their work late. The engagement is break even at best. The good clients are going to stay because they value what you offer. They treat you well. They treat your staff well. And a lot of times they wonder what took you so long to bump up your fees. So I'll add just one last thing. This is not a one and done. If you find that you are underpriced right now and you've got to make a big jump to get to market, that's understandable, but you have got to stay with increased costs and overhead and consistently increase your fees year over year. So that is, what we see in our practices. We encourage them at least 5% a year, and they're doing more. So.
Amanda, a great example that summarizes, I think, is a story about Dina in Boulder, Colorado. Dina looked like the slide that we did, the "Is this you" slide. There was frustration, overwhelm, long hours, frustrated staff. She put her CEO hat and spent time in that CEO bucket and entrepreneur bucket, and made tremendous changes through this rightsizing project. First of all, she took your advice around disengaging 1040 clients that were underpriced or that were not tied to accounting work. And for those that remain, she significantly raised the prices and began treating price raises as a system, an annual increase. And then I think in addition to that, she added the quarterly consults with clients. So that wasn't a one time a year interaction with the client. That started adding value to the clients. So they were happy to pay the higher fees that she was charging. So this then affected her revenue. She was raising clients on the existing client base. So as you said, it only lifted the firm, allowed her to bring home more profit. It helped with staff bandwidth because there was fewer of the low volume or high volume, low profit clients in her system. So everybody's working less. Everyone in the firm is happier because they took this courageous step around repricing and annual pricing. So the staff bandwidth has increased. And I think she also had a focus on increasing the amount of recurring revenue she was getting from the accounting side of the business. So through these quarterly tax advisory conversations, it unlocked accounting opportunities. And I think her accounting revenue over a few year period went from 57% to 67%. Right. So now the firm is getting money in and reliable, predictable monthly recurring revenue. There's tax on top of it, but everybody's been repriced and the whole system is happier. Dina's happier. She's making more money. She's working fewer hours than before. The staff is very happy and they're all very engaged. So I want to add on to what Amanda talked about. So if you think about rightsizing, we talked about price. I look at it like this way. In our view at Padgett is fix price, fix your speed and efficiency, and then grow the firm because you don't want to scale a bad business model. And so process is key. and this is where you get more efficient. I talked about my coach earlier, the one that taught me to act like the CEO of my company. One of the things he taught me was that my attention to improving our firm's processes would change everything, and he was absolutely right. And that started with written standard operating procedures, SOPs, that were shared and trained frequently with the team. And our view at Padgett is you first address that pricing problem and then you pay attention to the efficiency of the business. But this will help tremendously in the right sizing project because you're getting paid more and things are running smoother. I even learned that I needed to have SOPs for my individual work. I have an SOP for how I check email every single day and how I respond to it and how I think. I don't want to have to make decisions that I don't need to make. And so those standard operating procedures for individual work and teamwork are incredible. But so you want a firm where work goes from step A to step B, from one department to another without friction. And your job when you put that CEO hat on is to innovate those processes and train your team so that it happens smoother and smoother and smoother. An easy process that we coach on for this is when you're working on that business is to just write down where you saw problems. Take your last busy season, for example. Look at where the work comes in, how it gets assigned, how it gets prepared, how it gets reviewed, then how it gets delivered to the clients, and how these things happen. List the broken stuff, where you saw friction, where you got complaints from your staff or from your clients. It's simply writing these things out and then creating a new checklist, a new way of getting this work done from each step, and especially keep close attention to the handovers between one person and another, or one department and another. Write it down, get your team's feedback. You're going to help get buy-in, and then we lock it in, and then we're following a written standard operating procedure for how we do accounting work, how we do tax work. Train, 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 and then go and deliver. You solve just one friction today, and it has a cascading effect because that problem doesn't return forever. And it's just one way you can chip away at where problems have arisen in your process. So you're turning frustrations into victories. But my encouragement is this important work isn't done until it's seen by all and all in the firm know it. And strive for improvement, not perfection. But this is another system. It's a system of improving the processes inside the company. We like to think of a business as a system of systems, and systems are useful when they're written down and when everyone understands how they work. And this is where having a great team is so helpful because they can help you deliver the work and then give you feedback on how we get it done. We have a franchisee at Padgett who went through this process and in their first year cut the time it takes just to do their high volume of tax returns in half. We encouraged them to track the time that it takes them to actually get the work done. This isn't PhD level stuff here. It's just being mindful about how we get work done and being careful to improve it. So that's how we address speed and workflow. Amanda, I want you to spend a minute talking about how we look at technology inside the firm and where that has a role within right sizing.
Yeah, so as you know, this is like one of my favorite pieces of what I get to do at Padgett. I love looking at software. It changes all the time. It's so exciting. But the headline is technology will not solve a process problem. So to your point, you've got to put pen to paper. I mean, we get our firms often to map out their workflows like with pictures and arrows and charts and stuff because you need to, before you try and put a piece of software in your system, you need to understand how data flows, right? So technology, software is just moving data around. So how do you want your data to move, or how does it actually move in your practice? So map it out and visualize it. And once you can see that, then you can lay a technology solution on top of it. So where do we start with technology? Because you guys know there are thousands of apps out there. First thing is to figure out what the problem is. What problem are you trying to solve? So as you said, if you can pick one little thing where there's a speed bump, where there's a bottleneck, where maybe there are some repetitive tasks being done manually, there's overly complicated communication. So manual input, pick a thing, and then go figure out what solution can fix that. So moving on to the evaluation, the middle column here, introducing a new piece of technology in your practice is a huge financial and time commitment. It's huge. So you've got to make a good decision. So it's really worth doing due diligence to pick the right software. The options can be overwhelming, hard to navigate. Remember that software websites are written by marketing people, not accountants. And so they will promise to solve all of your problems without telling you how they're actually solving those problems. So we want to be careful about the shiny new object syndrome. I know a lot of folks get sucked into that and the rabbit holes. First thing I would say is you identify a problem, make sure that your current software is that you're using it fully, because software changes all the time. We're seeing this with some things that we use in house, like Carbon is a workflow tool a lot of our folks use. There are a lot of changes there. So make sure that you're using your current systems fully, because they might be able to solve your problem without you having to add on another software. But if not, rely on peer input to at least narrow down your options. Again, if you did a Google search for accounting workflow management, you'd probably get 30 solutions. Ask friends who are in the same space as you. What are you using? What do you like? And then, make sure once you've got it narrowed down, really ask yourself, what are the must-have features? So what are the things that are non-negotiables? So let's take the example of a workflow tool. If you really want your workflow package to have a client portal, then that's going to narrow it down even further for you. Don't get distracted by billing. That's a fancy feature that some of them might have. That's not your requirement. Stay focused on what it is that you really need. So get a trial and try it. And then probably the most important thing is, once you've made this decision, jump. Embrace the mindset. It is going to be tough. There's going to be discomfort, but take the long view. Trust that you've made the right decision. The best way to the other side is through. So you push through. Stalling is probably the worst experience for everyone, including your staff and your clients. So you're going to have staff objections probably. You want to keep them happy, but you can't let staff dictate the pace of change. If you let your staff stick with outdated process, outdated technology, you're actually doing them a grand disservice. You're allowing them to become irrelevant in the industry, and that's not fair. So you are the owner. You make the choice, and you make a good choice, and you see it through. And same with client objections. You have to dictate how clients are engage with you. That's probably one of the top 3 ways to either gain or lose efficiency in your practice, is to do things different ways with clients. So you've got to stay true to it. So do yourself a favor, make these changes, see them all the way through. At Padgett, we are able to do a lot of this for our offices, but we use the same process. We assess, we evaluate, and then we adopt. So follow this key, do a good due diligence, make a decision, and pick the right solution that's going to solve your process problem, and jump.
And commit. There's no perfect software, but there can be perfect processes and let your process drive that software. I think that's well said. Well, I want to spend a few minutes on people and how we view people as part of the right-sizing journey. A guardrail for us is that your percentage of labor costs inside the firm, the goal there is around 1/3 of the revenue of the firm. And if that feels outrageous to you, that may be a good sign that something needs attention. If you have the right work and the right clients serving the right way, and you're priced correctly, right? This factory that has inputs and outputs that's called your accounting firm should be able to support about 1/3 of your revenue going out to staff. And oftentimes we see people who are much, much higher than that number in our audiences. But again, this is something to aspire to. So if you have the right work and the right price, this right staff at this metric is very achievable. But knowing this number for whatever it is at your firm will help you identify problems inside your organizational chart, or it might identify problems inside your pricing, or maybe it's a signal to you that you have way too much high volume, low profit work. But inside this metric is your people. And they're obviously the essential piece to making this work, and the most challenging piece of being a CEO of your firm. It's not easy to get right, but it's your job when you put on that CEO hat to make sure you create a place that is not overwhelming to work in, that where people are engaged, where they're thriving at work and delivering as a high performance team that are happy to be there. This takes time, but for all you doers out there, it's time to address this and look at as a business and be in charge of that business. And this means more time in training. Going back to pricing, it means surveying to find out where your people are so that and how they're experiencing work at your firm. Ask them, walk around. We highly recommend surveys. You'll find ways to get creative in hiring through talking to your folks that can help you meet this minimal metric or meet this metric that we have and solve problems. One great story that comes to mind is one of our franchisees, Emily and Andre, own a Padgett in Nashville. They prioritize hiring a staff person who could be there year round. She focuses on the growth of the practice, like technology adoption and training during the slow months. But she, during tax season, is a tax preparer and does review work as well. So they really hired her to just be get paid all year to be a tax prep person, because they just needed that inside the business, and they were willing to pay year round, but then found ways that she could come in and solve problems. They are able to develop this into a trusted team member and improve their firm by figuring out how to keep this person year round that started out as a seasonal assignment. There's so much to be said about people and how this all works, but look at that metric for your own firm, and then it'll start to help you diagnose problems elsewhere. We haven't mentioned marketing or going and getting new clients. You can grow your practice 10 to 15% a year and build in efficiencies that generate more profit for you and fewer hours just by getting the pricing right, then addressing your processes, your technology, and spending time with your people to make sure that it's an excellent place for them to work and the best option they've got. I mentioned Emily and Andre earlier, and I think they're a great story that's helpful for you, because they represent kind of a firm owner team that have put all these pieces together. They're great Padgett owners who summarize what Amanda and I have been discussing. They've got a written system for everything, and they don't compromise on those systems, and neither does their team, and it's made them massively successful. With systems, they don't want to subsidize their monthly accounting work with their tax work. They want the long-term reliability and relationships that come from the accounting work, and tax is essentially the gravy. So they run their predictable and repeatable monthly profit and loss through the accounting work they've gone and achieved, won, and increased pricing on. Then they go through a busy season and do tax work, and that is the bonus for them throughout the year. And I think it's a really innovative way to think about a firm. As far as clients go, they actively talk to their staff. Who are the difficult clients? Who doesn't want to continue? What staff doesn't want to continue the relationship? Their employees are just this incredible, valuable resource, and they really prioritize the employees so that they can take care of the clients. And as far as processes go, everyone is clear on how work moves throughout their business and how much volume and client work each staff member should take. Emily and Andre, then, because of these systems, they get to focus on the business. They get to be salespeople. They get to be reactive. If there's a problem, they can go and solve. They're acting like the CEOs that I mentioned earlier. But their mindset is keeping a tight view of everything would stifle the whole business, and so they trust their team. As far as tech goes, it's a useful tool for amplifying the work, but it's process first, just like Amanda said. As far as employees go, I mentioned employees, they treat it as the most important part of the business. They feel like they can always get new clients. They've got a strong referral engine, but they can't complete the work if they don't have the staff to do it. And so they are constantly evaluating and developing their people. But how they've treated their business is and being very clear about what their services are and being very goal oriented has taken them from 450,000 just 10 years ago to 1.5 million last year. And so they're a fantastic example of a firm. And the way they price, they start with what are they going to take home from the price of a client? Will it fit their overhead goal of around a third of the business? And will it accomplish a third to go to the staff? And so they don't engage a client unless the financials are lining up for it to meet their take-home goal. It needs to address the overhead, it needs to address the staff. So they are a great example of I think the amazing work that Padgett owners are doing. And I'd like to give, just as we close here and have a final polling question, just a minute to speak about Padgett and how all these stories we've lined up and lessons learned are tied together. Emily and Andre are part of our amazing network of owners inside the Padgett system. They run their firm, but they're supported by Padgett's home office team of 20 people who help Emily and Andre and all these other owners focus on creating growth, serving clients, reducing their workload, and making running a firm easier. Like Amanda and my job is essentially to be in service of accounting firm owners so they can serve their clients. If you found this information useful, talk to us. Whether it's just to advise about right-sizing in your firm or learning more about how Padgett could be a partner to you, because I really do believe that you shouldn't go through owning an accounting firm alone or any small business, and you need a coach just like I did, and it made a tremendous impact on me. Right-sizing is not simple, and it helps to have a competent, caring partner to get you there. And we work with over 165 firms in the US and 80 in Canada, and we've been doing it for almost 6 decades. For you, if you're watching and you own a firm, you could affiliate with Padgett and join our network, receive massive benefits that will help you grow profit and run your firm much more efficiently as a part of a team of hundreds of other owners who are mentors and friends, and supporters for you. Just a quick rundown of what you get when you're a part of Padgett is tax and accounting support by a team of CPAs and EAs that save you time, answer complex questions, give you confidence to go back to the client, but also show you ways to make more money in tax and accounting opportunities. Our owners save at minimum $30,000 a year on discounts for technology that we go out and do and select and train and support for the owners. Some owners are saving $50,000 to $100,000 a year straight to their bottom line. We help with deciding who you should hire and advise you on hiring and your staff and building an org chart, and then go out and give you tools to go and help that talent. Padgett owns a central marketing team that acts as your marketing team. We don't spend enough money on marketing as accounting firm owners, and at Padgett, we're bringing you leads through inbound leads and training for local activities. We'll coach you on how to run your business and accomplish your goals, and we even provide benchmarking data that identifies coaching opportunities of where you need to take the next step. If you have ever thought that there's got to be a better way to do this, it doesn't hurt one bit to have a conversation with us or attend one of our information sessions. And we'd love to have a 30-minute conversation with you or invite you to attend an information session. I think there's going to be a banner that you can click on to participate and watch one of those information sessions. We've had firms cut their time to do tax returns in half. We've had firm owners stop working weekends and then go out and acquire 3 times the revenue that they started with, just because it freed their time. And don't go alone. So if you'd like to have a consult, what I'd ask is answer yes to the next polling question, or just click on the Learn More button that's in front of you now, because we would love to talk to you and about your next the next step in your firm's journey. And last thing I'll say about Padgett that I'm really proud of is that our owners take home more money and grow faster and work fewer hours than peers in their communities. And we're incredibly proud of our work that our firm owners do with us and together to make that happen. But as we wrap up, I hope this has provided value for you around right-sizing and create a vision for where you could take this firm. Amanda, thank you so much for your great work in walking us through, especially the pricing. And I know that's near and dear to your heart. And appreciate you being on here today.
Well, thank you for having me. I could talk about this for 6 more hours if we had it.
Well, I could too, and we'd love to talk to you. And we'd appreciate it if you'd consider Padgett if you think that this could be a great opportunity for you, as we think it is. So that sums it up on right-sizing on Padgett. We appreciate you having us and appreciate you all in the audience being here today. And I hope you found tremendous value in our session.